guys, what's up? Welcome back to the channel. Average Trader here with a new video for you today. It's Wednesday, guys, and let's say trading hasn't been going exactly according to plan this week. Before I explain why, if you like these videos, if you like the format where I show you guys the trades that I'm taking, why I'm taking those trades, and how I manage those trades, and also my trading progress, I'd appreciate it if you'd like and subscribe down below. And if you've got any questions, I'd be happy to answer anything I can in the comment section down below too. Thanks, guys. So, talking about trading this week, I want to get something off my chest here, and that is that trading is difficult right now, guys. Trading is so hard right now. This market is really, really difficult to trade. If you guys are making lots of money at the moment, I tip my hat to you guys. Well done. You're killing it, because for me, I find this market extremely difficult to trade at the moment. Why do I find it difficult to trade at the moment? Well, here's why. I trade pretty much 80% of my trades are based around, 80% of my trading is based around fundamentals, okay? I like to read the news, I like to make an assessment of how that might impact the market, and then I use technical analysis to maybe enter trades and exit trades and things like that. But for the most part, I like to build kind of like a fundamental, thesis about why I want to make this trade, and then I take it. And the problem at the moment is, guys, the fundamentals are just being ignored. Nobody cares about the fundamentals right now, and it's making trading for me particularly difficult, because apart from the fact that I like to trade fundamentals, I am also a little bit of a contrarian trader. I like to trade counter trend, and I like to short things like the S&P 500, which is just pretty much unshortable at the moment, because I mean, look at it. So yeah, I mean, it's making things difficult, guys. I mean, when I get up in the morning, I turn on my computer, I sit down, I start reading my news to make my plan for the day, or when I do it on a Sunday to make my plan for the week ahead, I'm looking at these news stories that say things to me like China-India tensions, where they had a skirmish with each other yesterday afternoon, and 20 soldiers were killed. I'm listening about Beijing going back into lockdown. I'm listening to a second spike of coronavirus cases in the US, which is cause for concern. There's so many things going on. China-US tensions. I mean, I could go on all day. Unemployment, economic slowdown. It's just, the list never ends. And for me, that just makes me want to short this market. And don't get me wrong, guys. I get it. I understand. The reopening trade is back on. The Fed's got our back trade is back on. The 3 billion or 3 trillion US dollars in liquidity trade is on. I get it. I know why the market is being bought up. I understand it, but I don't buy into it. I can't buy into it. I can't long this market here. Even from a risk to reward standpoint. I mean, if you want to take some short-term trades in this market and get long here, yeah, I get that. I could probably get on board with that, but I kind of trade more long term. Most of my trades last about a week or so, and I just can't find a reason to be long risk at the moment. So I'm looking to short risk. So I'm looking to short Aussie yen, Aussie dollar. I'm looking to short the S&P 500. I'm looking to short dollar yen. I want to short all the risk pairs basically, and I'm finding it difficult, guys. I'm finding it difficult. So I mean, you know, if you watched my videos last week, you see that we were short the Aussie dollar. We had a great position here. We had a really nice average in. We got in at around 70, just over 70 cents. And the trade was going really good. We got some nice moves down. We were hoping to get this move back down to around 66 or 65 for the final target, which would have been absolutely, probably, best trade of the year so far. And again, the risk off sentiment just doesn't last too long anymore. The Fed came out, they said they're going to buy corporate bonds, and of course, we turn on the taps again. And up we went. So I closed out the position once we started to cross above the 4-hour Bollinger Band, the middle of the 4-hour Bollinger Band, and I took profits. Now, it was a good trade. We got about 7.5% profit out of that trade, about $380 or so. So it was a good trade, but of course I would have liked to make some more out of it. So yesterday my plan was, okay, I'm going to sit on hands. I'm going to just wait and see what happens for the day. I was kind of looking for actually the Aussie dollar to get back up towards the highs and maybe short it as a double top, but we didn't get there. And yesterday I was watching the S&P, and I decided to take a short yesterday on the S&P. I liked it up here at around 3162, so I shorted it yesterday, and shortly afterwards the news came out that the Florida coronavirus cases had gone up dramatically, and a couple of other states, and it kind of spooked the market. I mean, I thought when it sold off, because it sold off very, very quickly, I thought, okay, maybe the market's waking up here. Maybe we're realizing that these China-India tensions are a bit more serious than we're given credit for, or maybe we're paying attention to the fact that Beijing has gone back into lockdown now, or maybe we're realizing that this second spike in coronavirus cases could damage the economy. And I was hoping for a big move down. Now we got a move down, all right. It was big. It was 3%. And it happened so quickly that I went out to walk the dogs. And by the time I came back up, we'd gone down 3% and back up 2%. And then overnight, last night, the move completely reversed itself. Because I think people are just so conditioned now that they need to buy the dip. The Fed is going to pump this market to all-time highs. And hey, they probably will, in fact. So people are just convinced, yeah, buy the market, buy the dip, any dip, buy it. And yeah, of course, at some point, that's not going to work anymore. What that point is, I don't know. I'm going to try and find out, but we'll see. So this is the kind of thing we're dealing with at the moment, guys. Question I want to ask you guys, though, is what do you guys think about the situation in America right now? I'm going to give you an example now of lockdown done correctly and what America is doing, right? So in one situation, take for example New Zealand. So they did the lockdown for about 3 months. They did a full lockdown. They closed the borders, etc. They've done everything that they had to do. And now, as of I think last week at some point, they're completely coronavirus free. They've got no cases in the country, no known cases in the country, let's say. And they've been able to go from turning their economy off, which yet it's a huge damage to the economy. I get it. I'm not saying that it doesn't. It does a tremendous amount of damage to the economy, but they've now been able to turn the switch back on, and fully. They've gone from 0 back to 100 because they don't have any coronavirus cases left in the country, so they don't need to go into partial reopening or social distancing or anything. They've just been able to go back to normal. And not only that, but they've given their citizens a reason to be confident to go back outside. They're elderly citizens, they're people who are vulnerable, the people who don't want to put elderly people or people who are vulnerable in harm's way. Those people now have the full confidence to walk outside the door and know that there's pretty much no chance that they're going to get COVID-19 from whatever they want to do that day. So the economy goes back to as normal as possible. Now in America we have this situation where they did the lockdown, they did some damage to the economy, a lot of damage to the economy, let's say. They realized how vulnerable the economy was there and that they couldn't continue into a full lockdown for very long, so they went back into the reopening too early, and now we have a situation where the coronavirus is spreading quite freely in the community and there's a high degree of virus transmissions, and now they're trying to reopen. Now, what does that lead to? Does that lead to, I mean, I don't know what the percentages are. There's going to be probably 60% maybe of the people in America who don't really feel the virus is a threat to them and they just go about their day as normal, or they don't believe in it or whatever. But you're going to have a degree of the percentage of the population who are going to be, I don't know, maybe 20%, 30%, who knows what the number is, but it's going to be a significant figure of people who are kind of worried about this virus, who are afraid of it, who don't want to go out shopping for some trivial items just because they're bored, because they're afraid of getting the virus, or they don't want to go on a flight, they don't want to go on holidays, they don't want to do the normal things that they would do, which would stimulate the economy, because of this fear of catching the virus. And if we end up in a situation where this goes on for months and months and months, where there's a high degree of transmission and a lot of people who are afraid to go outside, does that do more damage to the economy than a shutdown done properly for 3 or 4 months? Time will tell, I guess. I mean, my opinion on it would be that yes, it will do more damage in the long term, but I'm not an economist, I'm just a guy sitting on a computer talking shite through a YouTube video, so you know, you guys can tell me what you think in the comment section down below, but I kind of think that's a big worry for the markets going forward, and I think it's one that the market is overly discounting right now. But anyway, we'll see. So anyway, what I was talking about was the S&P short. Yeah, I wanted to talk to you about what I'm doing today. So nothing special today, guys. The market has been pretty much sideways all day. We've just kind of waffled up and down. Aussie yen's been pretty much sideways. Yeah, S&P is sideways. Oil, again, pretty much sideways on the day. If we look at the VIX, again, we're just down about 1.6%, so no major moves there. Dollar index is up about 15 cents on the day, but not a huge move. A little bit of strength in the dollar, but very kind of muted response, let's say. 10 years down, just under 0.25%. We're at 76 basis points at the moment, so everything's pretty much sideways. I get the feeling we're waiting on the American session to start in the next hour. Once we get that underway, we might start to see some bigger moves. So I'm just kind of positioning myself for any sort of risk-off move that we get going into the afternoon. I was looking at this trend line here, this channel that we've been moving up in the Aussie yen, and I just took a short position here, very small position, only 0.06, guys, very, very small. I just want to see if we get a break of this trend line here and a break below the 4-hour moving average here. If we do get that and we get a close below it and a close outside of here, I'll probably add into the position and see if we can get back down to the lows here. If we get down to 72.7 and we break it, then, you know, opens up the trap door down to 71.6 around this area, around this 200 4-hour moving average, and then it's anyone's guess as to where we go from there, guys. Probably back to the highs, though. Everybody will just buy the dip again, and I'll end up reverse. All my profits will reverse again. But anyway, look. We persist and we keep trying until it works. A friend of mine said, guys, once, you keep shorting it until it works. So we're definitely doing that at the moment anyway. Yeah, I mean, not really too much else in the way of trade ideas at the moment. I do have my eyes on, let me just open up this chart here. I have my eyes on the CAD Swiss. So just looking at the CAD Swiss chart. I highlighted this one in my video on Sunday, guys. I just like this area up here. Kind of, I mean, this kind of looks like a really massive, big sort of bear flag, if you get me. And I just kind of like this area here, this retest of the daily 100 average, the mid-Bollinger Band here. So I might take a little position here, short it, and look for something back down towards the lows here. We'll see how the day pans out. I may consider it. I'm just going to see what happens with the Aussie yen trade first. If I do take it, I'll let you guys know in tomorrow's video. I'll show you what I'm doing with the trades and, again, how I'm managing them. So that's going to be it for today's video, guys. If again, like I said, if you have any comments or any questions, just drop a question down below and I'll be happy to try and answer. You can follow me on Twitter, guys. There's a link down below as well for that. I put some updates on my trades on there too. But that's about it. Yeah, guys, thanks very much for watching the video. I hope you guys have a good day trading as well, and I'll see you tomorrow. Bye-bye.